Yeah, hello again, everybody. There is a last chapter on trade tax, and I hope we can deal quickly with that. It's on the treatment of trade tax under income tax. So we are here at the end of the chapter. We have two aspects to speak about. Are the trade tax payments deductible? And the answer is a clear no. And there is also a credit for trade tax payments to the income tax liability in 35 EStG. So let's shortly deal with the first stuff in income tax and corporation tax. The trade tax expense is not deductible expense, so it does not lower the taxable profit you have to pay for it from your net income. You can find that rule according to the general principle that if a rule affects all forms of enterprises, so natural persons and juridical persons, then you can find it in the EStG. If it can only affect juridical persons, you find it in the KStG. According to that rule, you find our rule about trade tax in the EStG in the section which deals with business expenses, business revenue, and profit definition. So paragraph 4 and section 5b in paragraph 4. So after we just did remind you of that, trade tax is a non-deductible expense, we should talk a bit about um, the fact that trade tax is a very problematic tax when you look to its economic effect, because usually economy says all kinds of income are equivalent and can be substituted against each other. There are, when it comes to the investment of capital, in competition with each other. So now we have here regular income tax for all sources, kinds of income, plus one additional extra burden for a specific tax, kind of tax, or kind of income. It's late in the evening now. So when you invest into business property, you have to bear an additional financial burden. And that is exactly that form of investment which creates jobs and sustainable sources of income where really something is produced. So to make that especially burdensome is probably not a very wise idea, because this way you direct investments away from this source of income and make other more passive kinds of investment more attractive in competition to them. So that has led to the general conviction that in principle trade tax is a bad thing and should be abolished. But unfortunately, the German constitution says that cities should have a certain autonomy. They should have a tax of their own, and that should be a tax on income or a part of the income where they should be able to fix the tax rates on their own. And the problem is, if you then abolish trade tax, you would have to design another tax which replaces it and can be given to the cities. For example, a local income tax of all citizens, inhabitants of a city or so. You would either have to design such a replacement tax for trade tax, or you would have to change the constitution. And when it comes to the majorities which you need to find such a solution, no needed majority has ever been obtained, and no convincing concept for another tax which could replace trade tax has ever been brought forward. So as a consequence of that, the federal government, I believe 2 decades ago, decided, okay, if we can't solve the problem, we can at least try to make its consequences go away, or to make the consequences nearly unfelt by designing some clever tricks. The idea was the federal legislation was changed in a way that natural persons, income taxpayers, can now deduct the amount of their trade tax which they paid to the municipalities from their income tax liability. So that's why it is called a tax credit. You know, a tax credit is always a payment which lowers your tax obligation, not your tax base. So the way how that is meant to function can be understood by the following example. Imagine you have an income from business of 1,000 euro. The trade tax shall be 140. Your personal income tax shall be 40%, your average tax rate. So we end up with an income tax claim for the 1,000 euro from business of 400 euro. And now you just make use of that credit mechanism and say, I owe the state 400. I already paid for trade tax 140. I credit this, and so the remaining amount I have to pay is only 260. That means basically the financial burden of the trade tax is, in such a case where everything works plainly and simply, completely removed, because the federation or the income tax fisc renounces on exactly that amount which you have already paid to the city. That means nothing else than that indirectly the federation pays your city tax. You pay and they lower their claim correspondingly. That's a great trick. But the problem is that mechanism, that credit which you get, does not always function as it is meant to function, or as it is as we dream of, because there are first some effects which are seldom seen, and there is, for instance, some limitation for the tax credit built into the mechanism to prevent abusive behavior. For example, can you imagine what happens if you say to a city council, if you levy a tax of 200, this will be completely refunded to your citizens by the federation. If you levy a tax of 300%, it will be completely refunded to your citizens by the federation. Now imagine the temptation to say, okay, then we increase the tax to 900%. And that will then be completely borne by the federation. So we will drown in money, we will probably have to buy golden lamps for the streets. There will be golden stones and golden streets and everything in luxury in our city. But I think that's far better. We all think that that's far better than having a remaining amount of income tax to pay over to the central authorities of the state, which then probably spend the money elsewhere. So there would be a kind of a run between the cities who can generate the highest tax rate. So that cannot be wanted by the law, and so you will have to prevent that. So there must be a limitation for that tax credit mechanism. And the limit which has been built in is simple. At present, that is 2021, the maximum tax credit is the one which is the tax amount which results at a multiplier of 400%, because that is at the moment the most frequent or the average rate levied by cities at the moment. So that is a limit. If a city wants to take more, then the additional percentages become an additional and therefore effective tax burden for the owners of businesses in that city. So that will probably slow down their speed in which they want to increase tax rates. Naturally, you can again imagine, how will a city council deal with the question, do we take 250% or 300%? Well, Most of them will just say, doesn't matter, let's take 300, and everybody will nod. It nearly affects nobody. But on the other hand, if you are already at 440%, then to propose let's change the rate to 450% will make everybody frown sitting around the table. Well, that's more expensive for us all then. And so only the ones who do not run a business will be in favor, perhaps in favor of the proposal. The others will feel some strong emotional opposition to that proposal, however deeply funded it may be. Now, there are other problems. It's a tax credit. So yeah, it means you can lower your tax liability for income tax, but you don't get a refund. So if your trade tax payment is higher than your liability for income tax, then you don't get anything back. So you always have problems if your income tax is a very low one. Then you can't use up your credit fully. And so the tax saving effect, which was wanted by the law, cannot come into effect. So to illustrate that, an example. You have an income from business of 1 million and your trade tax is 140,000, exactly at the minimum. Now you will probably think, okay, somebody with 1 million, how can that somebody be a low taxpayer? Well, imagine you have income from other sources. For example, losses from somewhere, 900,000, let's say agriculture, lease and rent, or from where else you want to have it. So your personal income is only 100,000 and your income tax will approximately be 33,000 only. Now it's clear that everything you pay is paid for the 1 million here, is only paid for positive elements of the income. So it's clear all the 33,000 refer to the income from business. The rule says you can deduct the trade tax amount from the claim of income tax or for income tax on business income. So you can everything deduct from the 33,000, but you end up at zero. You don't go below zero, so no refund. You can't save by the credit the full trade tax. You end up with zero income tax, but you pay 140,000. So here the trade tax has effectively increased your tax burden on the income. It is not completely neutralized by the law. Bad luck. Example 2, similar situation. Lease and rent income 100,000, income from business 1 million, trade tax 140,000. Now, unfortunately, from another business engagement, a share in a partnership somewhere else, you are a full partner, and from this second business you or share in a business, your income is a loss of 1 million. Now your total taxable income is 100,000, tax again 33,000, and you can now credit your trade tax to the income tax which you pay for your income from business. Your income from business, unfortunately, is zero because you have plus 1 million from the one source, minus 1 million from the other source, so total income from business, zero. What do you pay for an income of zero? Zero. So you can credit your 140,000 to an amount of zero and lower it to zero. Tax saving effect, zero. So here everything goes wrong again. No decrease of the additional financial burden by trade tax due to the specific constellation of your income tax situation. Bad luck. Okay. Nobody expected that when you made your investment decision, but unfortunately in this constellation, you hoped that the trade tax never played a role, and now trade tax says, well, I do. So to calculate tax burdens here might be very complicated, at least if you want to plan thoroughly in advance. That's nearly impossible. So bad luck, and this is not the best way to do it, probably. Example 3, you have now income from several sources. Let's say business 300,000, that income from self-employment is 300,000, and you have a loss from lease and rent of minus 500,000. Now that probably means you have now again a taxable income of 100,000 and tax of 33,000 approximately. Now in your particular case, how much of the 33,000 refers to your income from business? Well, you have half of your positive income from business and half from self-employment. So half of the tax refers, that's the logic, to income from business, and half of it refers to self-employment. So 16,500 is only your tax which you pay for your income from business. Now, your trade tax on the 300,000 was 42,000. At least I hope so, that I didn't make a miscalculation. Well, so again, your tax which you pay for income tax is far lower than the trade tax. So you can't recover all the trade tax by the income tax credit which you get. So a part of your trade tax is a definitive additional financial burden for you in this constellation. It is probably unforeseen. It was hardly avoidable. So you may probably have competitors who are in a different constellation. For them, trade tax can be fully recovered in form of the trade tax credit. For you, it can't be. So it's a question if that can perhaps be a distortion of competition or not. One should analyze that a bit more thoroughly. I am not willing to be very categorical on that, on that assumption, but at least that is not the very finest result which we hoped for. So you see that credit mechanism does not really perfectly work. And yeah, apart from all these unwanted effects which render that credit mechanism rather imperfect, you have also an additional wanted effect, which is rather surprising. Because just to remember that, I said that, let's say, in a kind of an edge of one of the phrases before, this tax credit mechanism is offered for income tax payers in 35 EStG, but you don't have any comparable mechanism in the Corporation Tax Act. That means if you are a GmbH or an AG, your trade tax is fully additional tax burden. It is completely on top. You don't get a credit mechanism. So here the legal forms are treated completely differently with respect to the trade tax. So we have a tax which has very different economic effects depending on who you are. The official justification is that corporation tax is already so low, but we will see later, probably in chapter on the corporation tax systems, why that is the case, that corporation tax is so low. It is only so low because together with the dividend tax, then you have one really full tax burden comparable to the top burden for income tax. So it's rather a lie, or to be more polite and optimistic, a self-deception to think that corporations pay a lower tax amount and that this could justify that there is no tax credit given to them. Yeah, that's the basic problem here. So for us, that means completely different effects. And in a city with a multiplier of 300%, you will, in the city council, if there are only business owners, you will nevertheless have different opinions when it comes to increasing the tax rate. Those who run their business as a sole trader or a partnership will not feel a big opposition against increasing the tax rate, because for them it has, in the normal constellation, no additional fiscal burden effect, um, apart from the case where they have some of these unlucky constellations which we just described. But I trust, or I expect, that they will not be aware of that risk. But the owners of a GmbH or an AG will strongly be opposed to any suggestion that the tax rate could be increased from 300% to 310%, because for them the additional 10 points are already an effective additional tax burden. It increases their tax which they have to pay. So that's rather surprising. So you can easily prognosticate who is going to vote in favor or against a tax increase in a city council, at least if these people understand their own tax paying situation. Yeah, that was my remark on that tax credit issue. And this was also the last small video on trade tax. Next chapters which are going to come for business taxation will have to deal with how can we do economic analysis of the facts which we know to prepare decisions, what are some basic ideas there. And naturally we also will have to talk about special constellations or special problems combined with business taxation. I rather assume till these videos will come out that will take a longer period of time. But now you are already familiar with the basics of all the most important three taxes in Germany, which are levied on income. And apart from the trade tax, you can possibly say the basic principles of income tax and corporation tax also give you a basic understanding of the basic structures of comparable taxes in other countries. Well, thank you very much for watching. If you survived this video until here, I would again greatly appreciate if you recommend the channel to others. So if you liked the video, recommend the channel to people whom you like. If you disliked it, recommend the channel to people whom you dislike. And you might even think about a very strange combination. Even if you like the video, you could recommend the channel to people whom you don't like, because that then creates for all of them the maximum confusion. And so you could enjoy some fun when you see if these people try to find out why they have got recommended this channel. Okay, that's enough for today. Thanks for watching. Enjoy the time till the next video comes out, and yeah, have a good day, have a good week, and I hope to see all of you again on this channel soon. Thanks.